Welcome to the Collective Genius Podcast, the show for real estate investors who are looking to scale.
Welcome into the Collective Genius Podcast, the podcast for real estate investors that want to grow and scale their business. I'm your host, Leon Barnes, and I am grateful and blessed to always have another member of the Collective Genius to join me and tell their story, their journey, their conversation with the genius is what we like to call it. And today, I have another one of those members, Mr. Chris Miles with Money Ripples, that is joining us here today. Haven't seen you in a while, my friend. How are you?
Doing well. It's been good to see you too. I know it's always fun when I get to see you guys in Tampa, when it's face to face or something.
Well, especially because last I knew you lived in Utah, and especially in the wintertime, it's you like to be that snowbird that comes down to Florida from Utah. Oh
yeah, for sure. Yeah, I'm definitely a guy being raised in Oregon. Definitely not the kind of guy that loves to be freezing to death. Or same thing in the summertime. I don't want to roast to death either, but you guys can keep Florida in the summertime.
I've been here for 5 years now, and even now it's warming up, but every summer, especially July and August, I'm getting to a point where, okay, I got to find a place in the north to go to, whether that's Michigan, or Minnesota, a place with lakes and they don't need air conditioning in the evening time. I'm getting to that point, not quite there yet, but we're getting close. Maybe even Utah. Utah has great weather in the summer as well.
Yeah, if you go up to Park City, but it's hot. Like we get up over 100 degrees. It's just not humid, right?
I was just going to say, it's a different hot than here. I can tell you that for sure, with the humidity levels as high as the temperature. Well, I appreciate you taking the time to be on with us today. You are, someone that I wanted to have on the show because you are not a traditional podcast guest in the sense of a real estate investor. But why don't you, instead of me telling them, why don't you introduce yourself and what it is that you do?
Yeah, so I'm often called the anti-financial advisor. In the sense that I used to be a financial advisor over 20 years ago, but had since repented and became a real estate investor and realized that was the way to freedom. And so that's the short story. But yeah, I have my own company, Money Ripples, where we really help people become work optional. They work because they want to, not because they have to. And my story was really interesting. I was going down the college path, and I was actually planning on becoming a business owner, and primarily a business consultant of business owners, right? And I figured if I'm going to do that, shouldn't I have real life business experience, not just get an MBA and be some snotty little, arrogant kid saying, I'm going to teach you what to do in business. I've never been in business before, right? And so, my dad always taught me hey, you get real life experience. That's important. So I actually dropped out of college with one class to go. I was only planning to take a 1-year sabbatical, but I figured let's just take a year off, start some business. I don't know what it's going to be, but start some business, get that expertise, then go back and get my MBA. Well, when I was starting to look around, what kind of business would I start? I had a friend that said, "Hey, I just became a financial advisor at this firm. You should check it out, man. It's awesome." And I was like Adam Sandler, if you've ever watched, the movie The Wedding Singer, right? And he's trying to get a job at the bank, and he's like, "Well, what's your experience?" He's like, "Well, I like money. I like to get more of it. I have a jar on my refrigerator. I like to put more in it, and that's where you come in, sir."
Right.
And so naturally, I was kind of like that guy. I was like, okay, I learned a little bit about money, but I really don't know much. If I learned anything about investing, worst case scenario, I walk away learning about money, but I also learned to do business. Well, I ended up loving it so much, I actually never went back to college. I stayed dropped out. I went down the entrepreneur path because I really enjoyed being my own boss. And after 4 years, I sat down with my dad. Now, I understand my dad was like the penny pinching saver, right? He's the guy he was so cheap that for every year, because he'd buy things on sale, he bought Cap and Crunch. So during my 8th year of childhood, I ate an entire year of just Cap and Crunch. I have scars in the roof of my mouth to prove it, because you suck on those little Cap'n Crunch things and they hurt, right?
Delicious, but deadly.
They're deadly. Yeah, that's right. It's like, like the Joker, when he talked about he like put a razor blade in his mouth, I think he just had a Cap'n Crunch is what he had, right?
That's
And
a similar feeling.
totally, yeah. So I mean, I did that, but luckily my dad switched up the next year. We had Fruity Pebbles that next year and stuff, but it was for like a year straight because he would buy everything on sale. He was like the strict penny pinching saver. He says frugal. We all say cheap ass, right? And so he's that kind of guy. And so eventually, when I was as a financial advisor for 4 years, he said, "Hey, Chris, when are you going to advise me?" And so he was 61 years old at this time, and I sit down with him. And he says, "Chris, like, I got to get out of this. Like, my job is literally killing me. Like, I think I will die from the stress of my job," because he'd already had strokes and heart attacks by his 40s and 50s. So he was looking for a way out. And so I looked at his money for the first time ever. The guy paid off all of his debt, right? He had stuffed money in his company 401k. I mean, he was like Dave Ramsey's dream come true before Dave Ramsey was Dave Ramsey. And so he had done all this stuff. And he said, "Chris, can I retire?" And I said, "Well, here's the deal. If you want to retire today at 61 years old, you better expect to die in about 5 or 6 years, because that's when you're going to run out of money." "Okay, what do I do?" "I don't know. You did everything right. You're stuffing your 401k full. You're debt free. I mean, even your mortgage is paid off. I mean, you got nothing." I was like, the only thing you could do is maybe cash out, refi your house, but I wouldn't put that in the stock market. Plus, it's illegal. You can't put it into mutual funds anyways. So I'm like, I don't know. I don't have an answer for you. And it drove me nuts. I really did not have a good answer for the very guy that kind of inspired me to want to learn more about money. And it was just a month later, I'm talking with a friend of mine who I trained to be a financial advisor, but he left to go do this thing called real estate investing, right? He was doing all these fix and flips and everything like that. And I decided to call him up and I said, "Hey, how are things going?" My hope was he's going to tell me he was broke and he wants to come back to work for me as a financial advisor again.
Right.
He said the opposite. He said, "Man, my life is awesome. My dad and I have partnered on some real estate deals, and we've now doubled his income as a professor at the local university." I said, whoa, come on. Like, that's too good to be true. That's impossible. You've only been doing this for like 5 months. No way. He's like, "I'm doing it. You can argue with me all you want, but it's true." And finally I debated him. No, stocks are better than real estate. It is better, right? And finally he just stopped me. He's like, "Well, Chris, how many of your clients are truly financially free where they don't worry about money?" I said, "Well, none of them. Even the retired doctors and stuff, they still worry about running out of money too soon if they live too long." "Okay. I didn't expect you to be honest, Chris, but that's good to know." So none. Got it. How about this? How many of you guys as financial advisors are financially free, not off the commissions you're earning, but actually doing these investments? As I thought about it, and there's about 100 people in our office, and I said, well, I don't know, there's been guys here since the late 1970s, and, well, they can't retire either, so I'd say none. Like, there's your problem. And so I started going down that real estate rabbit hole, started learning about, like actually the thing that Robert Kiyosaki talks about in Rich Dad Poor Dad, right? Like actual cash flow. Even though I read Rich Dad Poor Dad, somehow I believe that it's somehow supported financial advisors, which was BS. He definitely doesn't. Especially when I read the book, Who Took My Money, which that one just says mutual funds suck. And so eventually, a couple months later, I'm sitting in a seminar and they're talking about all these stupid things that financial advisors teach. And I realized I'm that guy. And so I quit. I said, I'll never teach about money again. I'll be a mortgage broker, because it was 2006. It was like 2021, right? Anybody could be a mortgage broker. And I'll teach ballroom dancing on the side too. And so I did that. But of course I wanted to learn how these guys did things with real estate. And eventually later that same year, I started building up more passive income, not just from rentals, but even I realized I could do hard money loans to other investors and things like that. And I was able to retire when I was 28 years old. I was financially free, and that shocked me. I didn't think it would be that easy, right? Because I always taught people that you save for decades, and eventually if you squirrel away enough nuts for the winter time, you'll eventually have that, the short little winter of retirement, just as long as you don't run out of the nuts before you die, right? And starve out in that winter. So anyways, it was that shocking thing. And so that's where 2006, I was 28 years old, financially independent, not sure what to do with my life. And eventually people kept asking me how I did it. And so in 2007, I came out of retirement to teach people I did what I did. Went broke during the recession when the Great Recession hit, and had to dig out of that $1 million+ debt hole, and then became financially independent the second time at the end of 2016, just a few years before I met you, Leon. And so that was kind of my quick little version of that, those 10 years there. But really, I had to do it twice, not because I was a genius, but just because I screwed up the first time.
So there's a lot to unpack there.
Mm-hmm.
One of the biggest reasons I wanted to have you on was you have a real estate investing background. You longtime, CG member. Obviously, you're in the room for a reason. What you do is very beneficial to real estate investors. And that's our core audience, obviously. But others that, maybe listening to this are not yet full-time real estate investors as well, covering the gamut here. What you offer, what you did, let's talk about what you transitioned to after the crash. When I met you, what was it that you were doing? Because you were introduced to me by another CG member that said, hey, this gentleman is helping our group. I think he could do the same thing for you. So this is why I wanted to have you on. What is it that you are doing now that you were doing back then that helps real estate investors?
Yeah, the thing I'm doing now is that I realize that, although you can make good, quick money in real estate, eventually, you get to a point where you say, oh, that's a lot of work. Now if you're a wholesaler or a flipper or whatever, it's awesome because you can make some quick money, make millions and millions of dollars. But I know one thing that I taught a lot of times when we did hot seats or whatever, over the years was, and even warning before 2020 was, guys, you need passive income outside of your active streams of income. Because if you're only transactional in business, if you're only transacting real estate, you're no different than like a real estate agent in some ways. You can make a killer amount of money, but if all of a sudden that business shuts down, where are you going to be? Do you have other streams of income coming in besides your main core business?
So
and
pause there for 1 second, because here's what I want to get across. Right now, there are investors. You know who you are. You're listening to this right now. You're doing a couple of $1 million a year in very transactional business. You're doing, wholesale, fix and flip, hotel, installment method, novations. You are doing everything transactionally, and you have a high level of active income. We talk about it all the time. Active income creates your long-term passive income, which creates long-term wealth. The person that I'm talking to right now, that I want you to really zone in on this right now, like really dial in, is specific to that person that says, how do I start to build passive? Because you've got a super high active. So you know who you are listening to this show right now. If I am that person, Chris, now take to the next one. I just wanted to pause on that because this next part is very crucial to that individual.
It is, right. Because we saw that in 2020, even especially 2022, we saw so many of our friends like literally go out of business, right? Because that was all they had. And again, it's not that you shouldn't do it. And if you would have listened, I'll tell you this. I mean, if you're in CG, you got to be listening to these guys because they were warning everybody years in advance of things to come, things to do.
Bottom at some point had to fall out, right?
Yeah.
And we thought it was going to be COVID, and we were preparing people at that point. I appreciate you saying that because the goal of being in a community like ours is to have, to have some of the tea leaves, right? To understand,
that's right.
Maybe not predicting the future, but preparing you for it. And we were way out and ahead of this because we knew it can't just be up and to the right all times. At some point, you've got to prepare, like you were talking about before. You got to store the nuts for the winter. And then we knew winter eventually was going to come. So that individual that we all know that in the first quarter, second quarter of 22, that were selling to institutions really had a bump in the road is the best way to put it. Some of them went out of business. A lot of them, have recovered since then, but really had a bump in the road because they didn't have what you're getting at.
That's right. Yeah. I mean, give you an example. We had one of our premier members, Rob, right? Like, I was talking with him, he was out of Pennsylvania and, he was talking about his stuff because he was hearing about me talking about, helping some of my clients create $20,000 a month of income. He's like, how do you do that? Like, I want to know. I'm like, dude, you're a real estate investor. You should know. And this was like 2018, 2019. And I remember he even started transitioning his portfolio where he would cherry pick some of the best deals. So he wouldn't just, transactionally flip them all or wholesale them all. He would actually cherry pick some of those rentals and keep them. Kind of became almost his own property manager. Not always the best strategy. I'll talk about some better strategies if you're looking for more hands-off investing. But that's what he did. It was like he picked the low-hanging fruit, some of the cherry pick some of the best deals, kept in his rentals. That carried him through the early 2020s, right? Like and he literally, I mean, we were talking to have a conversation. He's like, yeah, my business almost shut down for months. Like nothing. We had to lay off 75% of our people. I know that's not the first time you've heard that story, especially among our group. But he's like, but the good thing is I still had income coming in, passive income coming in from my portfolio of rentals that he had. And that's the key, is that you want to have other streams of income beyond just the transactional stuff you're doing. Hands-off stuff, this is what I did. A lot of things I did. I mean, yeah, there's syndications out there. Sometimes they work, sometimes they don't. The operator, I always look for operators that have at least the last 15, 20 years of experience. Pretty much they went gray, either because they lost a lot of money beforehand and then they learned from it, or they've just been around a while. They're almost like the OGs of the industry. And so, whether I'm looking at syndications or partnerships, like I have a raw land partnership right now where, I've put in about $500,000 or so. I'm just the financer. They're doing all the work. But I mean, I'm getting paid over like almost $13,000 a month from just that one business alone, even things like lending. Hard money lending has been amazing right now for a lot of myself and a lot of our clients, because that's still happening. Business is still transacting, even though multifamily got kicked in the teeth the last few years. So does self-storage, right? That's another option, of course. And they haven't been great. Even some commercial has been hit pretty hard. I've seen some commercial in the sense of an industrial has been okay, but lending has been consistently for the last few years been great with the right operators, the right investors, where I can make still double-digit returns. And that's the thing, is like, say you have $1 million that you finally accumulated, not just reinvest everything back in your business. I learned this actually at a CG event from Mike Michalowicz, the author of Profit First.
Sure.
He came at the end of 2019, right before COVID hit. He started saying, listen, if you're always reinvesting your money, you are not profitable. You need to be profitable. That money needs to come home. Your spouse will thank you. Trust me, that's a big thing, of course, but those profits need to come home. And then some of that money needs to go to invest into passive investing, hands-off investments that obviously can be in real estate, but just not, always reinvested back in your business. You don't always want to play offense. Tom Brady did not become Tom Brady because he literally had no offensive line. He had to have an offensive line to protect him so Tom Brady could become Tom Brady. And that's where you got to play a good offense and defense when you're building, not just building your business, but building your portfolio of investments as well.
So let's go back to, and we'll get to infinite banking and your entire strategy. But you said some really good things there in regards to passive income, rental properties, managing of rental properties, managing of properties in general, and tenants specifically, is not for everyone.
No.
You mentioned hard money lending. So let's go down that, because that person that we were talking to earlier, we're talking to you again, a couple $1 million a year, highly profitable because maybe you have, a small team, you're netting, a great amount, and probably to a point of fault, right? If your margins are in the 40s and 50s, you probably need to do some hiring. No, you do need to do some hiring. But all of that said, as a strategy, if I am that investor and I'm looking to invest in others, how do I vet that person? Give me some more insight of how you, as an investor, you're vetting that individual so you make sure that money returns to you.
That's the most important thing, right? I want a return of my money, not just a return on my money, And so I always favor that one most. As some people say, bet on the jockey, not just the horse, right?
No doubt.
And that's so true. And I'll tell you, one of the best ways, one of the biggest reasons why I joined CG was because I was meeting some of the best jockeys in the industry, right? Mm-hmm. Think about this. When you're dealing with people, and I know I've met guys like, I think BJ Gramillion was a guy I met before, right? I met Mike Slotnick, with groups like yours, and even guys like
Mike would be a very big jockey to have on your horse.
Yeah. He's got to have a freaking Clydesdale, right?
Yeah, to make sure that I give some perspective there. Mike I'm 6'4". Mike's taller than me, and just a big human being. It would not be a pretty sight of him on a horse.
That's true. And half of that weight is all his heart too, because that guy's got a big heart as well,
So he does. But going back, sorry, I digress.
Yeah. But that's the thing. Like I realize that birds of a feather do flock together. And when I look for groups or organizations to be a part of, I look for who are people that do hold the same core values that I have, even in my own company, who holds a high standard of integrity, who holds a very high standard of being service-minded and oriented, right? Who's willing to be honest and open, even when it hurts, right? Those are the kind of people I like to attract. First and foremost, one, become that person, because you want to become the person that you want to attract. If you want somebody who's a good investor, you want somebody who's honest as an investor, especially, right? And so first and foremost, become honest and integrity, full of integrity yourself. And then two, get in a room full of people that also are that way. That's one thing I appreciate about your group, Leon, is that, man, like there are so many people out there. There are a lot of real estate investors, people that are really would make you guys, I don't know if I say look good, but obviously they have like a big following and maybe like 100,000, if not millions of followers. And yet you guys will still not let them in, because they have to have a certain level of integrity. And that's what I look for. So I look for those groups and those circles, those networks and whatnot. Even if those people know people, right? Expanding beyond that network is a big thing. So that's first and foremost. Mm-hmm. Second thing I'm looking for is I'm also looking for a track record. I'll ask them questions. Like I'll say, what was your worst deal? Like, tell me about it. Like, tell me how bad it was. Tell me how bloody and gruesome it got, right? I want to know how bad, how much your teeth got kicked in. Like, I want to know the dirt. Like, what was the worst thing? And tell me about, like, what did you learn from it? Not just, I'll never, invest with that person again. That's a horrible lesson. That doesn't work, right? It's like, yeah, here's what I learned from that. And here's what I've now done as a result. This is why my buy box is going to be very specific. It's got to meet these criteria, these parameters. And I want to hear that they have a system, they have a criteria, that they have parameters to know what they're doing. And so that's big for me too. And so I look for that track record. I'd like to see somebody been through a full cycle. So when I invest with people, even though it's not the most popular thing, I want to see people have been investing since at least 2010. So really 15, 20 years. Every once in a while, I might make an exception, but it's not just that they've been investing that long, but I want to see that people have been through hard times and come out on the other side. They're still here. I know the hard thing was in CG before is there's some young guys coming through. They're like, yeah, I've been investing and making tons of money since 2018. I'm like, well, who hasn't? You can bet a dog and made money in 2018 in real estate.
Better yet, the people that are 2020 that are now, here we are in 25, where the market has normalized and the market is no longer the star. You have to be the star. Not that the market is bad by any means. It's just normalized, and it's not even completely normalized back to 15 and 16 as a lot more inventory, because inventory is still low across the U.S. There's so much good, and I want to add something here.
Yeah.
I'm speaking to that person that is looking at alternatives for passive income that has a very high active income.
Mm-hmm.
More people today are applying, and this is one thing that I do get to see, being on this side for 7 years, being associated and a member prior to being on this side for 10 years now. The one thing I notice the most are trends, just based upon the applications and our members. So to your point of becoming a private investor, I see more applications of people that their primary focus is fix and flip today than I did in 19, 20, 21, and even beginning of 22. You had a lot more assignments, a lot more wholesale, a lot more hotel. Now it's real estate is cyclical. So to speak to specifics of passive income, there are more flippers that are looking to scale because they now have to add value more so than they had to. That same flipper that is applying today would have been a wholesaler and probably was a wholesaler or selling to institutions directly in 19 and 20. And so there's more opportunity to lend if you have a really good assignment market that works for you and you don't want to take on the hassle of starting basically a construction department. You have more opportunity today to put money on the streets than you had in the last few years. Specifically, I'm talking to that fix and flipper. There's still plenty of money that is needed in syndications and commercial. There seems to always be that activity, but specifically to the person, there's more people that I see today on the single family side, adding value than before. So there's a great opportunity. But the only caveat I will say to what Chris said is that there's not, you're going to have to invest in some people that you're going to take some chances on if you're looking for 15 years of history, because they may only have 3 years because they just started to having to add value in the marketplace because wholesaling was so easy in 19, 20, and 21 relatively.
That's right. Yeah, and it's not that if you have less experience that you're going to lose money, right? I just know that if I'm going to invest my hard-earned dollars, I'm going to put it with somebody who I know I'm not the guinea pig. Like
That's
I'm
ideal.
not their first
That's
go
ideal,
around.
for sure.
Yeah. So
that said, I also will say that, sometimes, when you're investing as a private lender, you want your money on the street. You want it to actually be used, and you're going to have more opportunities with the investor that has less experience to keep that capital moving and getting paid on it than the person that's been doing it for 15, 20 years. You may not have the money may be sitting on the sidelines for a little while and no interest being made on it because they have more lenders that they've already built up. The one thing I will just say and add to this, because it's a great conversation, private money is something that everyone wants to scale their business. There's three. I had this conversation today with a future member. Number one, you got to have local bank relationships to scale. Number two, you have to have access to institutional capital. And number three, the one that people typically wait too long for, is you have to have access to private investors, people that that have a couple $100,000 liquid sitting around. And you don't judge a book by its cover, because a lot of times that individual is someone that is, like you were just mentioning, your father, someone that is a great saver, has lived below their means for a very, very long time, and you would never know that they had a liquidity of $1 million just sitting around wanting it to go to work for them, and not to mention Roth IRAs and some infinite banking that we're going to talk about here in a second. There's other ways. They may not just have it in liquidity. They may have it in retirement accounts that can also invest. So that individual, the only thing I would say if I'm looking at putting more money on the street is I want to ask them specifically, to your point earlier, where have they failed? And in those failures, did you make the investor whole? Right? Even if you lost money on a project, I gave you $100,000. The money, the deal lost you $20,000, but the investor was paid their interest and were paid back their principal. Like that's the one of the most important things to me is, even in your failures, did you pay the people that supported you in those efforts? That's a very good question to ask when someone doesn't have that record of 10 to 15 years, as Chris mentioned earlier. Would you agree with that, Chris?
Absolutely. I'm glad you brought that up, because I know there's two different friends I had in CG that very experienced operators. Like, these guys have been doing deals forever, but they partnered together on one particular project, and I remember they were raising capital for it, and one of those partners just said, "You know what? I'm out. Like, I'm just gonna basically piss it away. Like everybody's gonna lose their money. We're gonna lose ours that we put into, and so what?" The other guy that was a CG member said, "I can't do that. My reputation's too important to let that happen." So he literally put $2 million of his own money to buy out their portion and then try to save the deal. Right. I'll tell you, he is one of our clients' favorite people to lend money to. Even though he's like sometimes a little bit wild and crazy, still they're like, I know this guy's high energy, but we love him because we know he's going to make sure he pays us back. And I think you can't, that's the thing, is like, that's not something that can be seen on a pro forma. That's something that happens from somebody's character. And that's what you're really looking for.
Yeah, I have these conversations quite often with investors that had tough times in 2008, like a lot of people, but they made sure that they made everyone whole. It may have taken them a few years, but they made everyone whole. And those people came back and invested with those individuals because they were a person of their word. And I say there's twofold here. Number one, that's for the person that's looking at becoming a private lender. And that's also for the individual that's listening to this that is taking private money right now. That's a golden rule, is to make sure that your investors are always paid first, even if that means you got to take a hit, because those people, you may lose 50 grand today, you may lose 100 grand today, but those people will always invest with you because you made them whole. You mentioned something there that I think is a good segue now. You're somebody that, as a business owner, you help people with a strategy that they can grow their retirement, and in turn can invest that as well. Tell me about Money Ripples, the infinite banking. You've done this presentation several times in CG, and the reason that we had a conversation back in 2016, I think it was, when you were introduced by Dr. Phelps, was we did not have what you offer in the group, but yet I knew several high-level investors that were utilizing this strategy in order to grow and scale their business. So without further ado, will you give us some more insight on infinite banking?
Yeah, absolutely. I understand that infinite banking is a strategy, not necessarily a tool, but the tool that people often use is whole life insurance. If you're not familiar with that, there's always term life insurance, which is basically just death insurance. We all get that. You pay it in, you die, finally somebody else gets paid, you get nothing because you're dead. Maybe you get a little box that you go in, right?
Well,
maybe
at least clean it up a little bit. Like, at least your loved ones get something. You don't get anything, but you feel good about it because you've left your loved ones at least with enough to get by.
It's true. It's very true. Yeah, I know it gives you that peace of mind knowing you're taking care of your family from even when you're not around. But whole life is a little bit different because it has that death benefit, but it also has this tax-free high-yield savings account that's a part of it that they call cash value.
Say that one more time. That tax-free thing. Say that one more time.
Tax-free high-yield savings account, right?
All right.
We always like tax-free, especially when we're real estate investors, right? But we're definitely looking for a place to put our money. And this is something I hear all the time from real estate investors, and this has been the case for really years. They're like, man, is there something better I can do than keeping my money in the bank, right? Because often we put our money in the bank, it pays us 0.0% rate of return, and then we get taxed on that 0.0% rate of return. And if you get a high yield savings account, I had a guy yesterday, he's like, he's a real estate investor, he's does a lot of flipping and whatnot, and he's like, yeah, I've got my high yield savings account, pays me 4.5. I was like, cool. Well, after taxes, what are you left with? 3? He's like, yeah. Don't remind me. Yeah. Yes. And I said, well, that's where, and he had already, done the strategy himself just recently. He's like, well, it's a good thing you helped get me set up with this actual infinite banking using this life insurance, because whole life is paying 6% a year tax-free on that cash. Not on your death benefit, but on that tax-free savings account that they have in there. And so you get to keep more of your money. And I actually started adjusting my strategy with it recently. But let me just kind of talk a bit more high level before I talk about how I'm using it now versus even when I was teaching it just last year. But here's the great thing is that it's a place you can store your money. It is liquid. You can get to it whenever you want. Here's what's cool. In most states, it's 100% protected from lawsuits and creditors. You could literally store millions of dollars in here and no one can get to it. I mean, you put your money in a savings account. If somebody sues you and wins, they can tap into your savings account with a judgment and it's gone, right? It's out. This is one of the only places you can put your money that it cannot be taken away. This reason alone, I was like on the Ryan Pineda show last December. He's like, wait, are you telling me like people can sue me and they can't get to it? I said, well, yeah. He's like, I've had 5 infinite banking guests on my show. Not one of them has ever mentioned that. They always talk about buying cars or buying their houses. I'm like, well, that's BS stuff. Like, I wouldn't buy cars or houses with it unless bank rates went up to like 10% or something. Like that's the difference. So anyways, that's one of the cool things. It's a good place to protect your cash. Now you can use it to invest as well. And this is where people talk about being your own bank, right? Because what happens if you can't get money from the bank? What if you can't get that private money? You got to go to your own cash reserves. Is there a more efficient way to use your cash if you're going to use it for investing, whether it be in your business, whether it be for buying real estate or wherever it might be? And the reason is that one of the cool tricks that you can use with whole life insurance is that, yes, you can pull the money out just like you can a savings account, But better yet, what you can do is get a line of credit against that cash. This is the same thing that Walt Disney did when he tried to start Disneyland. Nobody wanted to give him the money, right? They didn't trust him, obviously, because he was a big dreamer, right? And not all of his dreams paid off. So ABC, who was a kind of a struggling network at the time, they said, listen, Walt, if you come in with some of your money, some of your cash, we'll come in with the rest of it to do the land development and the development of this theme park. So he, one, sold off one of his properties, and then two, he tapped into his whole life insurance by borrowing from the insurance company, leaving his cash still in there, but he got a line of credit against that cash as collateral. And he used that money as the collateral for ABC to come in with the rest of the money. And the rest is history. Now we wait in lines for an hour and a half and smile about it, right?
Or
all because of that.
To not stand in that line.
That's right. We express pass it, pay even more than then only wait 20 minutes or give or take.
Time is our most valuable asset. Pay that extra.
It is. That's an ROI you cannot measure, right? Well, you can. It's called time. Yeah. But yeah, so that kind of thing. So that's a cool thing. You get this secure line of credit against it. It's a very low interest rate with the insurance company. You can do it with certain banks too. And I play the interest rate game, depending on who pays the better interest rate or charges the lower interest rate is the one I go with. Right now, it's the insurance company charging like 5% a year. But remember, say you have $100,000 sitting in there, you borrow $50,000 to go put it as a down payment on a deal. Well, that $50,000, although you've borrowed from the insurance company, the $100,000 is still in there earning that 6% tax-free interest, compounding interest. Now, yes, you're paying interest to the insurance company, right? You're paying them like the bank. But here's the cool thing. The loans, you pay back however, whenever you want. There's no minimum monthly payment. Your deadline for paying it back is your death. And even then, they just take it out of the death benefit to pay the rest of your family tax-free. So it's a great tax-free place you can store money, but it can also be used to create more leverage or you create more arbitrage, essentially making money in two places at once because you make money inside the policy because you never have to touch that cash. But then two, you make money and put it in your business, which by the way, you get to keep all the write-offs, not like an IRA where you lose them. Same thing with real estate and everything else. You get to keep all the write-offs you get as a real estate professional by using it for that method. So you can literally make money in two places at once.
You gave that's a great way of utilizing this leverage in the $50,000 example. Give me the most common, outside of that one, that's a great example of someone doing a down payment on a rental property. So again, I am that investor that is highly, my main strategy is wholesale, hotel, very quick transactional business. I'm looking at this strategy. How would you advise me that, the couple of ways that I could use this best? Because I know that I have talked to some of the highest level investors in this group, and this has been a strategy of theirs for a very, very long time. So give me some of those examples if I'm that individual we were talking to earlier.
Yeah, so let me go back to what I was going to say before here, right? Jimmy Vreeland, obviously he's a big guy in the group. He stores literally millions of dollars inside of his policy, and he doesn't use it hardly ever to invest. He literally just lets it sit in cash for business cash reserves and or personal reserves, or even a war chest in case there's an opportunity. There's investments happening, right? Because think about Warren Buffett right now. Warren Buffett's now got about $350 billion sitting in cash. He's just waiting, chomping at the bit for this everything bubble we've been in for years to finally pop, right? He's waiting to gobble up some good deals. The person with the most cash wins. And so I took the kind of lesson from Jimmy too. I was using it more actively. I stopped using it as actively more recently and saying, well, one, my wife wants to keep $400,000 liquid in cash that we don't touch. We don't invest, never goes to the business. It just sits around. Well, imagine the math that I did when I found out my credit union's paying me a 0.05% return on our savings account. 0.05. That means $400,000 sitting in there will make a whopping $200 a year. And then I get taxed on that $200. So I might walk away with $100 and some odd bucks, right? Where instead I told my wife, let's do this. Let's earmark, let's move money over instead towards our whole life policy. Have money sitting in there, say $300,000, that $400,000. We still keep $100,000 in a local bank we can get to any time. $300,000 will sit over here earning 6% tax-free. I'm earning $18,000 a year, not less than $200 after I pay taxes. $18,000 a year, plus I still make $100 over, or less than $100 over there, right? And so I diversify that. So I do that. business savings as well, if I'm trying to have liquid cash for that. And by the way, especially if you're ever trying to get mortgages, any kind of loans, business loans, or anything of that nature, understand that this actually counts as a liquid asset. So whenever banks say, hey, can you verify you've got money here? I just send them a statement of my life insurance. I don't even send them bank statements anymore. I just send them that and they say, check, moving on. Mm-hmm. So it helps me get best terms on my loans and everything. The banks see that as extra collateral. Obviously, it works with accreditations and things like that. The great thing is it doesn't count as an asset when I try to get my kids into college, because I've got 6 teenagers right now. And what's interesting is they don't even count it as an asset. No matter how much money you have in there, they don't count it as an asset against your kid for trying to get financial aid. Even though I know you're not broke, but I just had one of my daughters get a Pell Grant, which I was shocked. But that was the thing, is like a lot of my cash was liquid inside my life insurance, which they won't count. It doesn't count as an asset, right? So it counts as an asset when I want it to count, like with the banks, but it doesn't count as an asset when I don't want it to count. So this is a place I store as dry, like this dry powder, right? This capital that I can keep on the sidelines.
War chest, especially when you're talking about Jimmy. I love that's something that, we talk a lot about active income, having, sitting on the sidelines, waiting to pounce on the right opportunity. We say in sports, take what the defense gives you, and that the market gives you something, and it will eventually. You're ready to, those people in 2009, 2010, a lot of millionaires were created in that time frame that had liquidity to be able to pounce on the opportunities that came their way. In fact, I know of several of them here in the state of Florida that had liquidity to create rental properties that are now tripled, quadrupled in value over time, and still are holding on to those as rentals. So the opportunity is, I hadn't thought about that, and leave it to Jimmy to have a war chest sitting around. Of course, the Army Ranger has a war chest. Of course. Any other strategies that you can speak to that for this, the infinite banking and the whole life policy, that would be beneficial to the investors?
Yeah, another one I would mention too is just like I mentioned with that liquidity too. Steve Trang and I, we were talking on his podcast, the last time I was on. And we were talking about, how much cash is enough when you're going to keep it on hand. He was saying, hey, if it takes 9 months for a marketing strategy to work in your business, you need 9 months of capital expenditures, right? You need 9 months of operating expenditures for your business. And I was like, well, dang. Well, obviously, if that's the case, this would be a great place to keep it, because it could take me about a week to get to that money, and it works great. So that's one thing, just to kind of reemphasize that point of liquidity and how important, and how you can essentially make more with the liquid cash you have, so you're not losing to inflation, right? Another
part about the interest that's on the other side of it as well, right? Even though you're borrowing against it, it's still driving interest on that amount, correct? Not the amount that you pulled out, the total amount.
Exactly. Yeah, you're still making compounding interest, but if you try to pay it back with the returns of your business or with investments or whatever you're doing, it's cool thing is you're only paying back simple interest, which you watch interest go down over time, just like you do when you pay off a car loan, right? Sure. More and more principal, less and less interest. But when they pay you, they're paying you compounding interest that goes up over time. And that's how, even if you were paying the same rate, you can still make a bigger spread on the compounding interest than you do on the interest you pay. That's why you make money in 2 places at once.
Love that.
Another real estate strategy, that would be good, is I actually had a client where they were looking to buy their own commercial building. And they said, hey, I've got this old policy, this old life insurance policy. I'm thinking about just cashing out. I really don't give a crap about the insurance part. So I'm thinking of just cashing it out and then just throwing this and try to pay almost all of this, just try to stay as debt-free as possible. I said, well, hold on, Sparky, before you just go and jump and do that, why don't you do this instead? Why don't we go talk to the bank and see what they'll do with you already having the real estate as some collateral. He needs some extra money for the build out. But let's see if we put this as double collateral, see what they do. And of course, the bank was all about that. Because again, banks, by the way, just so you know, they invest about 15 to 20% of their own cash in life insurance themselves. This is where they store their own cash. I actually know people that own banks that refuse to put money in their own banks. Even though their family owns it, they will put it into insurance policies rather than into their own banks. And so I went to, I had him go to the credit union or whatever, the bank that he was talking to. And they said, well, yeah, if you put this up as extra collateral, we'll lower your interest rate on this commercial loan, by about 2.5%. So he got this like near 0% interest rate on this mortgage. So this $375,000 total, with the small building plus the build out, he's like, well, cool. I'm paying $1,800 a month mortgage payment. He got a renter to rent one of the spaces in there, and that was paying for his mortgage. And then a year and a half later, after it was already built out, everything was done, he went back to the bank. He says, hey, listen, can I take that lien off my life insurance now? That $300,000 lien you put on life insurance, can we take it off? They said, yeah, and we'll keep the interest rate the same. So understand, if he just got a normal commercial loan, he would have been paying like easily over 6% or so, 6 or 7%. But because he had the life insurance as extra collateral, he got like this 3.75% mortgage that was able to be locked in and at a super low rate to where he's hugely profitable on that building now. Great. So again, there's I just think of it as like this extra place that allows you to have cash. And yeah, people talk about using it for retirement or whatever. I'm like, well, screw that. Like, yeah, that's great. You can have tax-free retirement income like a Roth IRA, but you have to wait till you're 60 years old to cash in on it. You can literally retire whenever you want with life insurance tax-free. But I think the biggest thing is the opportunity is you can use this money now to make money now, that acceleration money in your real estate, because again, that's what you do best. So invest in those places you do best rather than just letting it sit around forever.
So many good examples there. I appreciate you sharing all of that because, you're in communities like this. You listen to this pod because you want, new ways, new strategies, new ways of thinking. There's plenty of examples there, no matter where you're at in your business, of how you can utilize this strategy. I would be remiss if, before we got you out of here, if we didn't talk about what you've learned over the years. You are probably, you are the only person that I've had on the pod that has been doing a podcast for 11 years strong, 900 plus episodes. Give me some of the best lessons with all of those interviews that you've done. Give me some of the best lessons that you've taken from some of those interviews.
Good point. Yeah, when I'm not blabbing my own mouth, right? I think the best lesson I get from those interviews is just how similar we all are, right? And I'm not trying to create an echo chamber, but especially in the real estate space, and even when we go outside, I'll tell you, like, it's so hard to find good information of things that are in this alternative space, right? Because let's be honest, when you tell people you do real estate investing or whatever, I mean, people they might not even know what that means. They might even think you're a real estate agent half the time, right? Or they're just like, oh, okay, well, that sounds hard. And yeah, there can be an aspect that can be difficult, in what we do. But the thing I love about alternative investments is that I believe that is the answer for American people, right? Like, this is the answer to create more freedom. But unfortunately, so many people are just brainwashed and taught by all the gurus out there, the Dave Ramseys and the Susie Ormans and the Mad Money and all that kind of stuff out there. And even on TikTok, they're all telling you just to slave and save away and accumulate your money forever. And the one thing I love with all the guests I have on my podcast is even though they have varying backgrounds, I mean, some have started in like tech industries, or they were maybe started out as school teachers, or they were in the military, they're veterans now, right? Or they're like me, they're former financial advisors that then since repented and said, man, that was a mistake. All those things, they always come out of it saying, this is where I found freedom, right? This is the place to be. And I think the most important thing is that, when I see these people and meet them and talk with them, I mean, we're actually not that different. I mean, even though we come from different backgrounds, we're all trying to get the same thing. We all want that freedom, time freedom. We want money freedom. And ultimately, kind of what my whole purpose of my Money Ripples podcast is about that ripple effect you create in people's lives, right? Is what's that you're able to create. And when you have more resource, when you have more money, you have more time freedom, it allows you to do greater things to bless the lives of those around you. And you can use those God-given gifts and abilities. And what I love to see is when I ask every single guest, I say, what do you feel is your ripple effect that you create in the world? I get a lot of different answers, but ultimately it usually comes down to, even if it's not like a legacy type of thing, which obviously there's a lot of that, but for a lot of people, it might just be, I just know that in my business, I'm creating jobs. In my business, I'm helping people, like the fact that I make money helping people, it's amazing. I love it, right? I know wholesalers get that same satisfaction too, like they're like, yeah, even though people might give wholesalers a bad name, in a lot of cases, wholesalers do help a lot of people too and solving a need, right? And so hearing all that ripple effect that people create, I think the thing that's amazing is that guys just like you, Leon, I know you guys listening as well, like you guys are creating your own ripple effect. You are able to bless more lives. Don't waste it by trying to show off with fancy cars or, I'm not saying you don't buy the fancy cars. They're kind of fun too, but it's not about the money and the stuff you flaunt. It's about whose lives are you changing? Whose lives are you blessing along the way? How are you blessing your family's lives and creating an example for them? How are you helping the very people that you're serving? How about providing jobs and opportunities for people, even when times are tough? Like you create a massive blessing in so many people's lives. Never, ever forget that.
Well said. Well said. Is there a top guest, or if you can't think of one, like your favorite guest, and if you can't think of one, your top three?
The one that just popped in my head was actually Pace Morby. Funny enough.
Why?
Didn't expect that, right? I expected Pace to be kind of like this, just, like a typical influencer, right? Like just, they like them, hear themselves talk. The difference with Pace is that Pace started interviewing me on the podcast, which I was not expecting.
I can see that.
And we started talking, and, this was the big thing. And this kind of comes full circle to what we were talking about at the beginning of the show. Because I opened my podcast, I always open it up with, about becoming work optional, where you have enough passive income to work because you want to, not because you have to, right? And creating a ripple effect in people's lives and blessing lives instead of, you live a rich life, not just get rich, right? And Pace was just like started introspecting a ton. He's like, you know what? I need to re-question all my priorities. He's like, because what am I doing with my life? How am I helping people? What am I doing? And he's like, you know what? And honestly, like, where does it end for us as active real estate investors? He's like, I remember when I just tried to get to 100 doors, and that was the goal, right? I'm sure nobody on this podcast or listen to this right now relates to this. Then after 100 doors, it was 1,000 doors. But then you meet somebody else who has 10,000 doors. Then you got to get 10,000 doors. He's like, it never ends. It never stops. He's like, and I think about my kid, and like we had this great Christmas. And what did my kid end up playing with? A box. And what did I do? I played peekaboo in that box. He's like, and my kid loved it. That was the best memory of that Christmas. It wasn't all the toys or the vacation trips that we did. It was the fact we were playing with a simple box and, giving my, just having that time with my family and creating those memories. He's like, that's what really matters. And I think that's why it was impactful for me, because I was watching him process and question his own life choices, right? And even the fact that it was never enough. Like he just felt like he had to keep playing a bigger and bigger game because that was the expectation in real estate. And I don't think that's the case with us. I think it's about what kind of life do we lead? Do we live? And again, whose lives do we bless along the way? And, and a shout out to you, Leon. I mean, like you and Jason, like I remember when I was doing the EOS system with Gary Harper, and they were asking me, they're like, who are the 3 people, Chris, that you look up to? Like people that that you respect the most. And yes, they know you. Who are they? And I mentioned you guys as one of those 3 for laying down the culture that I wanted to create in my own company.
Didn't know that.
Yeah. So now you do, right?
Appreciate
I did think of Jason Medley as a guest too. That did pop in my head right after Pace Morby, but I was like, he was good. And he even was one of my top podcast listens of the year too. But no, definitely. It's always been guests like that. People that are really making a difference. Not just the people that made a lot of money. It's the people that make a difference.
There's so much in that answer, and I wasn't expecting that, but it went down a path that we probably don't talk enough about on this pod, because we get down the road of the journey and what's next, and that may be the follow-up for a lot of the guests is, the why and how they're getting closer to that why and how that why has adjusted. I think that if you look at those of us that have enough grays on our head and our face, there's a shift. There's a shift from going of I always want more, which there's not many members that we have that don't want to continue to move the needle, continue to move the goal, the next goal, the next goal, the next goal. With all that said, though, what happens as you start to get older, you start to realize, well, why do I want to do that? What's the reasoning behind that? And generally, those goals get pushed up, not just because of an arbitrary number that you're throwing out there, the 100, the 200, the 300. It becomes, no, this gets me closer to my overall goal of my being, of my business. I am now aligned, and the only way to get to Gary Harper talks about this all the time, giving away X amount of dollars in my lifetime. I only get there by doing this and pushing these goals forward. And it's no longer about me. It's about the goal, what your BHAG, what you're trying to get to for your business is because you're leaving that legacy on the other side. Clearly, from a legacy perspective, 900 plus podcasts, obviously you're doing something right there. So for those that want to listen to the pod and give us just an overview of what happens on the Money Ripple Show.
Yeah, I mean, they're pretty quick episodes, usually 20, 30 minutes, but the whole focus is about how do you become work optional, right? And, often I'll present stuff even about what's going on in the economy and things like that, or teaching different financial principles or even money myths that are out there and that you need to break away from. But then we also have great guests too that talk about a lot of different things, everything from different strategies to just how to run a business. I mean, I'm sure a lot of the same stuff you cover too, but yeah, Money Ripples podcast, it's been going strong either because I'm bored or because, I'm trying to create something that's bigger than just me, right?
Well, you've been doing it for 11 years now. You can't stop at, just go, I'm done now. That it's just like we were talking about before with goals. You got to continue to raise the bar. If people, obviously the Money Ripple Show they can find on anywhere where they find podcasts, but if they wanted to reach out to you to talk more about the strategy of infinite banking and whole life insurance and how to use that as a real estate investor, how would they get hold of you?
Yeah, best thing to do is just go to moneyripples.com. And we've got like a lot of rabbit hole stuff you can go down with infinite banking or passive income stuff. And you even have a passive income calculator. It can show you how much passive income you can create in the next 12 months based on your situation currently. But yeah, you just reach out to us at moneyripples.com.
Awesome. Thank you, Chris. It's been a while since we've talked, and I appreciate you making the time. Great. As always, we went across the board here on all things of, financial and no longer financial advisor, getting into strategy to help real estate investors, and we end it with legacy. So a great episode. Much appreciated for joining me here today, my friend.
And it's such a big honor to be here. Thank you.
Thank you, Chris. So as I was wrapping this up, all I could think about is how guys like Chris come my way. Chris was introduced, and all service providers within our group are vetted that offer something to help businesses continue to grow and scale. Now, it could be a service like marketing. It could be loan. It could be institutional lenders. There's all kinds of different services that you as a real estate investor use on a daily basis. And Chris was one of those people that were referred because other investors in our group are saying this is someone that I know can help the group. And if you want to be in the room where you don't have to guess, who should I be talking to for X, Y, and Z? Well, all X, Y, and Z are in that room. So if you'd like to be in that room with guys like Chris and other members that you've seen on the Collective Genius podcast, the easiest way to do that is fill out our application at thecollectivegenius.com. We'll have a conversation about your business goals, where you want to go, and if it's the right fit for us and vice versa, then we could talk about where you would fit within the community and talk about next steps from there. I want to thank everybody for listening and all of the great comments. I had a select meeting here recently, CG Select meeting. I heard nothing but great things. To continue to put episodes out, and we will do that every Tuesday. These drop, and appreciate your support, comments, and liking and telling your friends. As always, you can find all of the episodes that we've done so far at thecgpodcast.com. That is it for today. Look forward to seeing you on the next CG podcast.
Are you ready to scale your real estate business? Visit thecollectivegenius.com, where real estate investors come to scale. Subscribe to the Collective Genius podcast and hit the bell icon to be notified when our next episode releases. And thanks for listening.